live stream to be able to talk about any questions you have around real estate investing, getting started, what's holding you back. We're going to answer a lot of those questions today. And we've got a really special announcement that I'm excited about. So we'll get to that in just a few minutes. I like to let these notifications warm up to let everyone join us here on the show. So that usually takes a few seconds given YouTube's slow reactions. A512 or 52 is here joining us today. Good to see you. Welcome, welcome, welcome. And you can get to see, okay, we got that up and running. So we get. I'm not sure I understand. I wasn't talking to you, Siri. I really wasn't. So any new faces here, let me know if you're new here to talk real estate investing. You know, what I try to teach people is, if you're going to take those small short-term profits, whether it's, trading cryptocurrency, taking your work money that you get from your job, you earn some kind of quick money from a refund, from a tax refund, that is just ephemeral, right? It's going to disappear because it's in U.S. currency. It's in U.S. dollars. And as the U.S. dollar continues to go down in value, how can we turn those dollars into long-term stores of value? And for me, real estate investing, I'm a longtime real estate investor, that's become my vault. Real estate to me is my store of value. It's the place that produces cash flow. It's a hedge against inflation. It's a tax shelter. And it is time tested for thousands of years, going back to the Romans who owned real estate investments as an investment, literally. Romans, they owned, apartments that they rented out to other Romans. So this is not new. So if you're new, welcome to the show and please say hello. And we're going to get started here in just a few moments here, just taking your questions today. Hey, Nick Brown from South Africa. Awesome. Good to see you, Nick. And No Diane is here from the Netherlands. Good to see you. And we have at our company at Morris Invest, we have a lot of international investors that we work with. And the reason we're able to work with investors from around the world is because we are able to offer non-recourse financing on our properties, which means that person in the Netherlands or South Africa or Australia or London doesn't have to worry about setting up an American entity. They don't have to go through all of the rigmarole and dealing with that, American bank accounts and all that sort of stuff. With non-recourse financing, it's not even tied to you personally. It's tied to the asset itself. So that's why non-recourse at a great, really low interest rate is killer for a lot of our international investors. Or KX says, we're planning to move to Tennessee in the near future. Would you wait to invest in real estate until we are in the area of where we live? Great question. No, I would not. Again, I've done, in fact, one of the reasons I'm on here today, I want to talk to you is because I've got a brand new webinar that I'm going to be, if I can pull up this little preview box here and do it. I got to do it this way. This little screen that I'm working with here. Here we go. So we're going to be doing a special live webinar tomorrow. I want you to go there and register. We're going to do it a couple of different times. So please, I hope, you pick a time that works for you. Right on your screen, if you go to morrisinvest.com/webinar, you get a chance to basically, we're going to go over all of these things in great, great detail about investing in your own backyard and why, the best investments are not going to be in your own backyard. And again, it really shouldn't matter at all considering you're not going to be managing. So why would it matter if it's in your backyard or if it's in the moon? Because you have a team in place that's going to manage these assets for you. And you're not going to be there knocking on doors and checking the foundation and the roof on a regular basis. That's what a great property management team does for you. So we have this webinar right here on the screen. I want you to all register for it tomorrow at noon Eastern time. And we're going to deep dive all of these questions. And so today I really wanted to open it up for some general Q&A about real estate investing. Make sure that you are set and prepared before we go into the webinar, and we'll go from there. Hello from Ohio. Hey, John, good to see you. Chuck from Hot Springs Village, good to see you, Chuck. Wiked Insanity is here. Good to see you. And so let me just pull this up here. I'm going to show you the webinar screen. So when you go over here to register, this is the screen you'll get. when you go to morrisinvest.com/webinar, there's the URL on your screen. Just click the register button, and it's Wednesday at noon Eastern time. So we've got 23 hours. 23 hours. So tomorrow at the same time, just click the register now button and see if there's availability. We have a cap on how many people can register. So hopefully if you're able to get in, great. Otherwise it'll be capped, and we'll probably have another webinar in the future, but try to register now for it so that you can get in. Steve, the design guy, says, hi, can people fly out to see the properties in person? Absolutely. You can fly out, you can tour them, you can see the whole neighborhoods, meet the team. Heck, we had a group, Nicole, didn't we had a group of our clients that came and flew down from Canada, and they got to meet their tenants, who I think the tenants work at the university nearby at Texas Tech University. And they said, yeah, we love our property. We love living here. It was funny. It was pretty serendipitous. So yeah, come on down. Our team will be happy to give you around, give you a tour, show you some good lunch places in West Texas. But we have plenty of videos. We have a video on our website, on YouTube, on this channel right now that walks you through. You can actually see behind the scenes of our properties, of them being built. But yes, Steve, we'd be happy to welcome you. Okay, darkening shadows. So this is really, I'm going to open it up now, just a Q&A. I want to have a general conversation about real estate investing. No question is off the table. Any new, newbies, more advanced, it doesn't matter. I'd love to open it up for those types of questions. So, darkening shadows says, so with the rising lumber prices, I assume it's still a good time to invest, and these would be considered long-term holds. Apologies if it's a dumb question. First of all, there is no such thing as a dumb question. I love asking questions from a 5-year-old perspective. Like, if I'm learning something new, tell me like I'm a 5-year-old, because I can't stand jargon. I can't stand when you flip on like an MS, like a CNBC or something, and they're talking all kinds of insider market stuff. And, and if you don't know that stuff, they're talking over your head on purpose. And so I don't like that. So there are no dumb questions, and I hate jargon. So the answer to your lumber question is, let me put this up on the screen. Can I do this? It's because it's already on the screen. We lock in our lumber prices at lower prices. We've already locked in our lumber prices before the prices went up. So when you're working with us as an investor at our company at Morris Invest, like, our lumber prices are not affected by that. And actually, lumber prices have started to come down pretty nicely. So, we had that big run up, and it was a big concern. For us, it wasn't, because we had already locked in our lumber prices from Canada. Freddie De La Cruz says, we're thinking of taking 4 days in Texas and would like to coordinate with your team to see some properties. Perfect, Freddie. Just book a call with our team. Just go to morrisinvest.com, and let me show you our website. And then just tell your team member that you're working with on the phone. So when you go to our website, it looks like this. And so, look, I'm on the screen too. See that big book a call button right there? This big, that's our Freedom cheat sheet. But right here is the big book a call button. Just pick your time, book a call, and then when you're talking when we call you at that 30-minute time slot, just tell them that you would love to come to town and see the properties and get a tour and all of that. We'd love to coordinate that with you. No problem. Okay. I think. Have I ever had a problem with Japanese knotweed? Are you asking about for Grover? No, because our little puppy got sick eating gypsum weed, if that's what you're asking about. No, I have not. No Diane says, Clayton, have you bought Bitcoin already? Yes, I did. Roger M says, any good markets with medium home values below $100,000? Median home values? I mean, you can find definite markets in different areas, but then, what you're dealing with in those types of market, our bottom line for one of our houses is going to be about $100,000. When you start going below that, you you risk a bunch of things. First of all, you risk like lower return on investment from an overall cash flow perspective. You risk higher crime. You risk less jobs, fewer jobs, not as much growth, not as much appreciation. So all the properties that we really do are going to be right around, I mean, the floor is about 100 and then on up from there. Roger, thank you for that question. Let's see. Steve, the design guy, do you mind talking about the tax benefits of owning multiple properties? No, I don't at all. You know, there's an old saying in real estate investing is buy until you die. And the reason that saying is so prolific, is it popular? What's the word I'm looking for? Not prolific. Like it's regurgitated over and over and over and over again. What's the word I'm looking for here? Anyway, the reason that that's the case is because, let me just put this up here. Sorry. Let me pull this down here for a second. This interface is a pain in my butt, and I'm just trying to bring up the chat. I am live, so why is this not letting me do this? Oh, Don, you're welcome. I answered his question on the live on the podcast this morning. Sorry. I wish I could get this chat interface up here, and it's not letting me. Let me go back here so I can see it better. Okay. Okay, Callie says, is California a good market to start investing in? No, it's not. That's why most of the I would say 80% of the investors we have that work with us at Morris Invest live in California because it's like one of the worst states to invest in real estate. The numbers cannot work unless you're buying like a large multifamily property or some commercial property, something. But for a single family and duplexes like we do, the numbers are not going to make any sense. You'll actually have a negative return on investment. Plus, California is one of the most landlord-unfriendly states in the country. So we only invest in the most landlord-friendly states in the country, like Texas and Tennessee and those areas. Sorry, there was a question. I missed it. It was propagated. Thank you, Lindsay. So the question was about buying multiple properties. Okay. So having multiple properties, if you're adding, like our clients will add usually a property or two every year to their portfolio. And so that's why we develop a long-term relationship with our clients at Morris Invest. And so, you know, over the years, you'll keep adding properties because when you add properties, now you're getting an additional tax shelter. You know, you're able to depreciate an additional asset. It's an offset against income for your income. So if you work a normal W-2 job, what do you have that can offset all of that money you're paying to Uncle Sam? You know, sadly, when you work for somebody else with a W-2 paycheck, you are in the highest tax bracket. And the sad part is that the reason that's the case, as Tom Wheelwright, our tax advisor, likes to say, it's because the government values you the least. Sadly, it's true. I mean, you work for somebody else, you're not creating a business. You're not creating solar farms or whatever, building companies, building factories, et cetera. But when you work a W-2 job and you work for somebody else, you're not really giving back to the system. That's the way the tax code is written. Don't shoot the messenger. That's just the way it's written. So you're taxed at the highest. That one way to mitigate those taxes is with real estate. And so we work with a lot of doctors who are pretty terrible with money because they're so busy focusing on helping people and saving lives that they never really learned like how to make money on the side, like with their own money. They make a lot of money, but they don't know how to manage it well, and they don't know how to have it work for them. So they just put money in mutual funds and things like that, and bad investments. And so when they invest in real estate, if they do it correctly, they're able to tremendously offset all of the taxes they're paying to Uncle Sam out of their W-2 paycheck to the hospital. And that's why when you layer in multiple properties year after year after year, that's why the buy until you die saying, continue to buy. Because the moment you stop buying is the moment you start paying income tax on the income that you're getting from tenants in your properties. And the way to offset that is by adding additional properties. And then the beauty of handing it down to your family is you can do that tax-free. And so all of that gets carried down. That's the beauty of real estate investing. There's nothing like it. Nothing even comes close. Okay, let me answer some more questions here. Aaron Sip says, who sets the prices to these properties you're associated with, and why are they listed over market value? They're not, actually. In fact, if you look at the most recent, our properties are set at market value. And the benefit of, if you've gone under contract with one of our properties, we've had a recent round of appraisals where purchase agreement ready to go. It's going to finish construction, being built a month and a half later, 2 months later, after the tenant is moved in, it's completed construction and it's ready to go. And that before closing with the bank is doing an appraisal. It's above market value. Like it's appraised beyond, it's not above market value. It's appraised beyond what they're buying it for. And so a bank is not going to give a loan on a property. We do conventional financing on our properties. A bank is not going to give a loan on a property on an artificial number. They're doing their own appraisal. A bank is doing its own appraisal. So we don't really do, we encourage all of our clients to use financing. Save your money, work with a bank, these incredibly low interest rates right now. Why would you spend your own money? And when you do that, that's an extra set of eyeballs. The bank is doing their own appraisals on these. So they're not going to just artificially throw out a number that's higher than market value. They're not going to do it. Ken Davis says, I'm on my third LLC buying a multifamily from a Californian who bought it a decade ago and ran it into the ground. If it works in, if it works in California, if the numbers work, great. But in California, if it doesn't work, if it's not, just remember it all comes down to ROI, Ken. So please watch my videos here on the channel. And Kelly, can you drop it into the chat here? A link to the internal rate of return, IRR, making sure that you understand these numbers. Ken, I'm sure you do. It sounds like you're pretty advanced, but just in case, I just want to make sure. Some people get allured by the idea of a great deal, it's like, oh my God, I got this great deal, right? Because a family member did this and they try to massage the numbers, and that massaging doesn't work. It just doesn't. The numbers don't lie. So just make sure that the numbers work for you. Aaron Sip says, how does non-recourse financing work? So Aaron, great question. Again, I'm going to go in this deep tomorrow live. Please join us for our webinar tomorrow, because I'm going to answer every one of these questions very deeply. So let me put this back up on the screen here, just so you guys I want you guys to register for our free webinar tomorrow. Just go to morrisinvest.com. Here's what the webinar page looks like. And you just click on the register now. And then pick a time. It's going to fill up. And when it fills up, we're going to close it up. Okay, so please register now before we run out of space, because I don't know how many, Lindsay, do you know how many we can get registered in it? Don's already in there. Great. I don't know at what time, is it 1,000 people? Is it 500 people? I'm not sure. So just please register before we get capped on that. They only allow a certain number. Okay. So Aaron, on non-recourse, we have a whole video here on the channel as well about non-recourse financing. Kelly, if you could link him up to that. And Aaron, it looks like, are you a Marine? Thank you for your service, if you are. One of my dear friends is a Marine, and he's moving, and we just had a going away party for him this weekend, and all of his Marine friends were there, and so it was a good time. Anyway. So Aaron, non-recourse financing means that a bank it's very hard to do this on your own. I will say this, and this is not like us patting ourselves on the back, but we have many, many years of developing relationships with these banks that will do non-recourse financing. And we work with about 4 banks right now that do it. And the way they do it is, first of all, they're looking at the neighborhood, the demographics, the job growth. They're really diving deep into all of the demographics of this area before they even consider putting their then money towards an asset. Remember, it's not tied to you, Aaron. It's tied to the asset, 123 Main Street. And now, yes, you're going to have to bring a little bit more money for a down payment. Usually, I think it's about $35,000 as a down payment. But they are backing the asset, not you personally. Which means if you've got a faulty credit score, it's not so great, or you're international, right? You're Canadian, you're Australian, you're from the Netherlands. The bank doesn't care. because they've vetted the property. Now, the banks that we work with, they're there at the construction phase. Like they're watching it being built, confirming that this is a great asset. And the reason I love this is because you as an investor almost get like a third set of eyeballs protecting this, right? This bank doesn't care about you, Aaron. They care about the house. So they're giving financing on the asset. So, and you can buy it in an LLC. Now, Aaron, you might ditch and go to Argentina, right? Well, the bank now is not going to care. Well, they'll care, but they won't really care because it's a cash flowing asset, new construction in the best school district, and they've identified that as an asset they would be comfortable having in the bank's portfolio of assets if you ditch town. So it's a brilliant model. More banks should really, I mean, they're starting to do it more and more, but typically when you do it with other banks and you try to do it on your own, the interest rate is going to be very high. We've developed these relationships over many years, so the interest rates for non-recourse is not that much higher than conventional financing. So I hope that answers it, Aaron. Johnny, why did I stop buying C and D? I never bought D properties. Occasionally, I still have some C properties in my portfolio. There was a time when you could get some of those C properties in neighborhoods that were going to. My goal with buying a C property was to get in an area where it's going to turn into a B property eventually. So the properties that I currently have in my portfolio have turned into Bs, and they've appreciated tremendously. Those are incredibly hard to find, and there's a lot of work involved, quite honestly. And so it's easier for us now to build in the best school districts, affordable homes. You know, we're not talking like A class. We're talking upper B class properties in the best school districts that we're buying land, building from the ground up with our team, and with great tenants in place, and in appreciating recession-resistant areas of the market. And it's just fewer headaches, to be honest with you. Plus new construction right now, it's so much more difficult to try to go out there and find one property here, fix this one up. And we still do it about 5% of the time. But most of the time, it's going to be brand new construction where we can buy up an entire subdivision in the best school districts and start from ground up. Ken Davis says, we try to stick to B and C properties, but I plan to buy multifamily going forward. That's great. Don says, in Toledo, it's a great place for C. Yeah, Toledo's not bad. Toledo had some high crime issues. Toledo also had some job issues. So, and those things tend to go hand in hand, jobs, crime. So just be careful with Toledo. Leonard, would we accept crypto as a down payment for property? It's funny. We don't do that yet with the title companies that we work with and so forth. Not yet, but I have to think that that's coming. Like, the future is here. I mean, it's going to be with smart contracts, with things being built on Ethereum or Cardano as a way to protect against title fraud. It's coming. I mean, and I don't see why it's not. I mean, it's going to happen. Let's see. Let's see. Sherry B says, have you considered putting a property on Airbnb? We have an extreme housing shortage here in Texas, and I'm looking into this for rent house that I have coming open. Yeah, I don't do any Airbnb. I have done it on a house that we have in the Pennsylvania mountains, but to do Airbnb correctly, it's a whole art unto itself. We are long-term investors, long-term buy and hold investors. Oh yeah, Don Elliott says, plus the cost segregation is wonderful. Exactly. Let's see. Sandy Smith, I'm taking a HELOC out and the banker is giving me 90% of the HELOC at 4%, but they're planning on paying off all my debt because my debt to ratio is too high. So he has to pay off most of my debt. I've never heard them. I've never heard them paying off your debt. Unless it's, I guess, internally with the same bank, maybe? Yeah. Someone says a clogged toilet. That's pretty regular, you know? CC says, any new construction coming? If so, when and where in Lubbock? Yes. Have you already booked a call with our team, CC? Do so, and our team can let you know. We have a waiting list right now for properties, but get on the phone and book a call with us so we can get you into the system and start having that dialogue about what we have available. So tomorrow, I want you all to register right now for our live webinar tomorrow at noon Eastern time. I'm really excited about it. We're going to be able to answer any questions. I think it's going to literally be the team and I and everyone at Morris Invest put about a year's worth of work into putting this together. I mean, it's been a beast, but I think it's going to be a game changer. It answers every question that we've ever gotten in the office, and it really lays out a pathway forward for anybody with multiple programs that we have to offer in real estate investing. Everything from our portfolio program, where you want to buy multiple properties at one time, whether you want to use non-recourse financing and go that route, if you've got credit issues, or you just want to exceed the amount that you're able to buy with conventional financing, or you're from overseas, you're international, a bunch of great options there. We have our partner program, we have our self-directed IRA program. All of these things we're going to go over in detail tomorrow, and just about the entire process of building goals, how to map out your freedom number, everything we're going to go over. I'm really excited about it. So Don, I'm excited. Don Elliott. Let's see other questions here. Ricardo Frontera question says, how cumbersome is to get a down payment when you're starting this process? My credit is recovering, but I'd like to get in before it's too late. Ricardo, how cumbersome is it to get a down payment? Well, like for one of our properties, the minimum down payment is going to be around that $40,000, $45,000 range, and then with financing built in. So, I guess it depends. And a lot of times people don't even realize, and like one of the things we talk about in the webinar, we're going to go through this tomorrow live, is, you're going to see that there are all kinds of hidden opportunities that you might not even thought about. So we'll go through that more on the webinar tomorrow. So please register. Foot ahead to Frito says, I want to buy your Pennsylvania home up in the mountains. I heard you talking about it since I followed you in June 2017. Thank you. Olby Bouchard, am I saying that correctly? Olby says, how much are the high-end duplexes that I saw on YouTube, and what is the down payment on those duplexes with non-recourse financing? Olby, we have a bunch of different price ranges, so I don't want to throw out random numbers. Our prices go from $100,000 up to $500,000 roughly. And with non-recourse, again, you're going to come with about 35% down. Have you booked a call with our team yet? Because we can go through those numbers on the phone much easier, and we can build something that's custom to you. So one of the things when we work with people, there's not like a one size fits all. What we really want to do is talk to you and learn what your goals are, and so that we can build. Because you know what, maybe the high-end duplexes might not be what you're looking for. Maybe and we can talk about those different price ranges and see what fits for you at this with your portfolio right now. So Olby, have you booked a call with our team yet? You can do it right here. Just go to morrisinvest.com and then click on the book a free call. I think you're talking about this is one of our high-end duplexes here. Okay, so I just want to read some more questions here. And why do you have presents? Oh, it's Kids Day. Oh, okay. My little girl wants to say hi. She says it's Kids Day today, and so they got presents.
I got ice cream and a hot dog for lunch.
Yeah?
And
That's yummy.
I got a caramel chocolate bar.
Okay, how much more sugar do you need? You don't need more.
And we have tacos.
Okay. I love you. Kids Day, they get presents. Every day they get presents. Like, what do you need more presents for? Like on Kids Day. All right, let me open up some more questions here. Hi, Ethan. Good to see you. Ken Davis says, "Yeah, we already talked about the huge increase in lumber costs." Guys, okay, I'm in the middle of a show. I know you guys want some little present that you got, but you're gonna have to wait. But you gotta wait for Daddy. Okay, I'll be right there. I'll be there in a few minutes. Okay? Yes, please. Go. Need to get a lock on this house. Sandy Smith says, when I set up a call with the same person, the same person called me back. I set up 2 calls so far and got the same person. Is that normal? I wanted to get another person so I can get different advice due to the fact that I want to buy one of your properties. Well, we all work for the same company, so I don't know why you would want to get different advice from one of our team members. I'm not sure. It's not like going to mommy, Mommy, can I watch some TV? And Daddy already said no. But Daddy already said no. But it's going to be the same. Like, our team is all on the same page, so I'm not sure what you wanted from a different person on the phone. Like, we have a small team on the phone. That's our part of our portfolio team, and they're fantastic. That's right. They are future real estate tycoons in the making. Well, we do teach them, at dinner. Not every night at dinner, but when they're not yelling and throwing stuff or whatever. But try to teach them, the power of performing assets. And so one of the games that we play with our kids is like, we'll name different things, and is it a performing asset or is it a liability? And I'll say a car, and kids will say, that's a liability. But if you turn that car into like an Uber, driving experience, or a taxi, or you rented it out, or then it becomes a performing asset. So all these things are good opportunities to teach your kids over dinner. Christine Kemp says, where I live in Ocala, Florida, they're building homes in many areas. Ocala, yeah, that's where my sister used to live, in Ocala. Let's see. Ricardo, okay, great. Yeah, if you registered. So we'll walk through that on the webinar. There's a lot of different things that people just don't think that they have access to. A lot of times people don't realize the availability of different funding that's out there. Awesome, Darren. We'll see you there tomorrow. Let's see. Ethan says they're not making any more beachfront properties. So what do you think of investing on the coasts? Well, here's the thing. Yeah. If you're investing, I have a friend, Rod Cleef, who invests in like really high end, really expensive properties on the beach, but he's doing more resort style stuff. And first of all, it's very expensive. And that's just a whole other game from an ROI perspective. What you're dealing with, of course, is, first of all, again, the ROI has to make sense. So you can invest in anything if the ROI makes sense. If the investment makes sense and the returns make sense, sure, right? But where we are, like in West Texas, it's high growth, high appreciation, recession resistant, low crime, high, like I said, high job growth, low vacancy rate, Fortune 500 companies. It's boring. I got to be honest with you. it's not like Malibu or San Francisco. It's just a great place to live. It's a great place to work. The state is very landlord friendly. So I don't really look for like the bells and whistles places to invest. Like I want to be in those areas that are going to provide real value for me long term, that are going to be protected. Then you're thinking about like what in California, think about mudslides and hurricanes in Florida and other things. And so these are all things to consider when you're dealing with, and plus the taxes, and you're dealing with really high costs and all of those things associated with that. And yes, thank you for smashing that like button. Freddie De La Cruz says, are non-recourse necessary for your properties, or are there any type of financing? I'm thinking of buying them with my first lien HELOC. No, we work with over 60 different lenders for conventional financing and non-recourse financing. So you could do a 1031 exchange out of some non-performing properties into properties that are performing. So absolutely. But no, non-recourse is not necessary at all. It's just, again, book a call with us because we like to see what we can work on. We want to know what your situation is. Like Roger's situation is going to be different than Freddie De La Cruz's situation, than Don, Don Cornell's situation is going to be different. So Don, you said you had 2 calls. Don, Nicole is in here in the chat. What do you mean they never, Darren Howarth says, I may be remembering the details wrong, but are you still putting money in IRAs for the kids and buying properties with their IRA money? Yeah. So Darren, that's a great strategy. Having the kids contribute, contributing money to a child's IRA, right, lowers your overall taxable income, lowers your overall tax burden because you can do it in their kids' IRAs. Then they, of course, invest in property. So we have our children's IRAs where they themselves now they have a percentage of ownership in properties because they've used their IRAs to purchase real estate. So, this is when you really start peeling the onion back on becoming a real estate investor. It's a game changer from a tax code perspective and from a long-term wealth building perspective. Let's see. Kevin Norton, can you give me a general idea of what the gross and net incomes are for one of your mid-range duplexes? Sure. And Kevin, it's probably going to be better for you to watch a video that we did where we actually have a graph and chart and numbers on the screen rather than me trying to remember those numbers off the top of my head. But Kevin, Kelly, can you drop it here in the chat for Kevin so he can bookmark it, where we walk through those numbers on internal rate of return? We specifically use one of our duplexes. I think we even used one of our mid-range duplexes in that example. So you can see the numbers right on the screen, Kevin. That'll probably be better for you to see it. But when we look at an internal rate of return using financing, you're looking at 18, 20, 22%, even higher. That's not even accounting for the tax benefits of getting like a cost segregation analysis, where you're basically getting the entire down payment back on your taxes because we provide cost segregation analysis on certain properties with qualifying clients. Like if you're a real estate professional, there's a couple of certain things you need to be in order to take advantage of cost seg, but that's just an added layer on top of it. So yeah, anywhere in that range. And then on a cash on cash net return, if you're not using financing, we're talking 8, 9, 10% net cash on cash return. Sandy, I'm not saying that this is the case, but sometimes people aren't. I'm not saying that this is the case at all, but I'm saying sometimes people we might not be a fit for them, and vice versa. Like they might not be a fit for us, and so that might also be the case where we explain our program and maybe people just don't like our responses, but we try to be honest. Like we have a minimum down payment on our properties. It's going to be in that 45,000 range. And also someone who's not a fit for us. I'm not saying this is you, and it could just be a total miscommunication. If someone just wants to buy a house, they don't want to develop a long-term relationship. They don't care about the team behind the team. They're like, I want a house. I don't want to talk to anybody on the phone. Well, that doesn't work for us. Like, we really want to build a long-term relationship with people because, we want to know, first of all, we want to understand what their goals are. We want to know where they're going in the future. And if they want to reach 10 properties and that's their freedom number, we want to help them get there. And it's going to maybe take them 5 years, 6 years to have enough money and to be able to do that. We want to map everything out for them so they'll see how this builds on itself, all of those things. And sometimes people are like, you know what, I'm too busy. I can't be bothered. Well, great. That's if you're too busy to care about your finances, then that's probably not a good fit for us. Then you should just go on Zillow and find a house and do it all yourself. I'm not saying that's what happened here at all, Sandy. I'm just saying I'm sure there's a miscommunication with when you set up a call and then you set up another call and there was 2 calls. I'm not sure exactly. So we'll figure it out. And Don, the same thing. Like if you've already had your second call, Josh will reach out and get back with you if there was a missed call or something. It happens. When you're dealing with phones these days, and people got cell phones, and I would say like when people set up phone calls with us, I would say like 40% of the phone calls when we call that person at that set time, they don't pick up and we have to leave a voicemail and then we have to follow up. I know it's a tedious process, but we do not we really want to develop long-term relationships with people. We like to speak on the phone because, to really dive deep into what we do and understand your financial goals. Yes, we are. MLG Jared. Yes, we are. Wants to know if we're a turnkey company. We're actually, I would say, we don't really use turnkey anymore. I would say beyond, like full service is really what we do because our team is building properties from the ground up. Then our property management teams that we work with will place the tenant. And then and only then after it's cash flowing do we sell the property. And then our customer service team is the best in the business. So we'll check in with you once a month. And then we're layering on, if you want additional properties throughout the year or next year, we're working with you long-term on your portfolio. That's what our team does. So, this is not here you buy a house, here's turnkey. Like to me, turnkey is like, we're giving you a house, you bought it, bye-bye. That's not what we do. We decided many years ago, like how can we take things to the next level and become the best? And we realized that customer service and providing that long-term value is the best way for us to do that as a team. And that's exactly what we do. And by the way, you can come over to our website, and if you want to go to we have a whole bunch of resources at morrisinvest.com. Let's go to our, if you want to look at our review section. These are all people that bought properties within the past few weeks, months. Like here's Norvella. She's out in California. She works in the criminal justice system. She bought one of our properties in Tennessee. I think she's buying one now in Texas with us. Here's Larry. He's a long haul trucker. I think he bought 2 properties with us. There's Jarrett in Florida. He and his wife. I think they're both teachers. Bought a property with us. Here's Archie and John. By the way, John is actually at one of our properties. You can see in this video, he's actually physically standing in front of one of his duplexes that he owns right here. So he came to visit and saw his property and got a chance to see it, and we caught up with him while he was standing there. So feel free, you book a call with us. You want to come to town and meet with us. We'd love to do that and show you around, show you properties. You can see them firsthand. Might even meet potential tenants in your property. We'll show you some great barbecue places too. Let's see. David says, I loved your Michael Saylor interview. Thank you so much. So David, one of the things you can do, again, borrowing against any of your assets, you can do this. Whether it's Bitcoin, you can borrow against. Like what Michael Saylor talked about in that interview was really powerful because just like real estate and Bitcoin, these are stores of value. And so if you've got Bitcoin, why would you sell it? Like, why would you ever sell your real estate? Like, I'm a real estate holder and I'm a Bitcoin holder, right? These are things that the government, mostly can't futz with, And so what you can do is borrow as a loan. Most of the exchanges will allow you to borrow against your assets. So you could borrow against your Bitcoin and buy real estate. And then because it's debt as a loan, you're not paying taxes on that debt. You're not selling it as a taxable event. When you sell those things, it's a taxable event. So why would you ever sell it is his point. So I hope that makes sense, David. Set up Zoom calls, Don says. Yeah, if you think people have trouble with technology on their phones, just wait till you start including like Zoom in the process, That way, at least if, the good thing about a phone is at least that we can leave a voicemail. Like, hey, we missed you. Here's our number. Call us back. With Zoom, it's like, good luck. How do you, No, I don't think so, MLG. I don't think it's hard to scale that way at all. I mean, you're saying when you buy like a turnkey property, it's harder to scale. Well, what do you mean? I mean, for instance, let's say, I don't think that's true at all, because to me, it's easier to scale because you have way less headaches, way fewer headaches. You're literally buying with us anyway, in the best neighborhoods, in the best state, in the most landlord-friendly state, the most recession-resistant area of the country. So already you're getting like a store of value there. You're getting instant cash flow, so you're not having to try to renovate a property yourself. Talk about headaches. I've been there, done that. Done thousands of real estate deals. I don't ever want to do that again. And so I want cash flow from day one when I close on the property, and I want a team that's going to take care of it for me. Bottom line. So, and I'm buying in great neighborhoods where I'm literally buying in the best school districts. Like, we're only building in the best school districts because they will always, they're always in demand. We have a waiting list for tenants in our properties. So if a tenant moves out, which they do, everyone moves, right? If a tenant moves out, after 5 years, we're going to be able to fill that up in like 2 weeks, get paint, carpet, touch up, do whatever tenant turnover needs to be done, fix a towel rack, et cetera, fix a door handle, and new tenants able to move in very quickly. So to me, it's much easier to scale when you've got an entire team that spends, every waking hour analyzing the data, building properties, and scaling as a company, where we're able to buy, the reason we're able to scale is because we were able to lock in lumber prices way cheaper than they are right now. So talk about scale, like we're able to do it at scale. But if you're going to go in like willy-nilly, kind of picking one property at a time, and you're hoping to find a great deal, like that's very difficult to scale. Again, trust me, I've been there. Because then you're, what if this one neighborhood is great for you? Are you really going to be able to buy in all, you're going to be spread out unless you're building an entire subdivision in a particular area, so you have some things to think about. Ken Davis says, amen. Contractors are difficult to deal with. Have it done in 2 weeks. Works into 3 months. And especially if you got a hard money loan, that hurts. Exactly. I've seen it. I've seen people get crushed in New Jersey. And I was a wholesaler, so I would never do new renovations in New Jersey. Like I would wholesale, and they'd give me a finder's fee when I was starting in real estate. And I saw so many people get burned. They would take out hard money loans to do a renovation. Their contractor would skip town, would leave. I once had a guy who literally was about to start framing a house, and his framer just disappeared. So he's left with a hard money loan on a huge property in New Jersey, and he has nobody to frame his house. And it was springtime, and everyone was busy with other jobs. So now he's sitting there waiting to have the house framed, a hard money loan that he's paying interest on. Like, this is the headaches in renovating stuff yourself. You're creating a full-time job for yourself. So I have a lot to say about scaling. Like we're able to buy 40 water heaters at one time. That's scale. We're able to buy lumber and lock in lumber prices at last year's prices. That's scale because of the volume that we're buying out of Canada. So there's a lot of things to think about when you think about scale. Jeanette says, this is my first time meeting you. Nice to meet you, Jeanette. I'm considering selling my California home, but can't figure out where to go in this crazy market. Would you like to buy a home and live in it? I would like to buy a home to live in and one to invest in. Any suggestions? Yes. Well, Jeanette, I would book a call with our team because we have the best properties in the best cities in the best landlord-friendly states. So from an investment perspective, I'm biased because no one's doing what we're doing. Not even close. From a full service perspective, not even close. So on that perspective, book a call with our team at Morris Invest. That's on the investing side. On the selling your California house side, and I'm not a financial advisor. I can't tell you what to do, selling your house or otherwise. But if I lived in California and I saw the crazy market that we're in right now, and I know that an outhouse could sell for $900,000 right now, and I could take that money and I could both buy an investment property in Texas and then also move to where I want to move in the United States, like some of the best areas to live, like Idaho, Boise, Idaho. Everyone's moving out of California, moving to Boise. They're moving to Arizona. They're moving to North Carolina. You're seeing just this migration out of California. California, for the first time in its history, saw a population drop this year. First time ever. So the same thing is happening. People moving out of California, because of the ridiculousness that's that state, it's crazy. People moving out of New Jersey, people moving out of New York, and they're moving to places like Idaho. They're moving to Nevada. They're moving to tax havens, like Texas and Florida. So if you'd like to book a call with our team, Jeanette, we're happy to help you with that. And they can help you, like if you're going to be selling your home in 3 months or 2 months, that's a great time for us to at least start having a discussion with you about your goals. By the way, I should mention, I haven't mentioned it for a few minutes here, and these kids are pestering me to go open some Kids Day presents. Register for our webinar. If you haven't already, tomorrow at noon, we're going to deep dive everything you need to know about getting started with real estate investing, understanding how the financing process works, everything. So go to morrisinvest.com/webinar. And we'll be answering your questions live at the end of the webinar as well. But please register, and I'm really looking forward to it. We've spent about a year working on this to get it ready. Finally, it's here, and really excited about it. So thank you, Jeanette. MLJ Jared. Okay, from your scaling perspective, I see your company can scale fast with renos and have prices locked in, but 20 to 25% down per property every time is hard to come by and can be years per property to buy. You can buy a fixer-upper and add value and earn equity in the property and pull out money yourself for the next deal. Yeah, but if you're also considering ways that a down payment, I get it. I get the down payment piece of it, 20, 25% down, but you're literally using somebody else's money and you're building equity from someone paying your rent and building your, and that's how you scale. And in a short amount of time, both with appreciation and equity pay down, and you're getting the tax benefits of owning a property where you literally almost get the entire down payment back on your taxes. That's how you can scale and lump these on top of each other year after year. So we can, I don't want to derail the whole live stream, but we can go back and forth on that, because how are you buying a fixer-upper? Is your fixer-upper $40,000? So now you're buying a fixer-upper for $40,000, $45,000, and now you're going to have to put $20,000, $30,000 into it. And then what, right? Then you've got to also find tenants, manage the property, all of these extra pieces, and then you're going to pull out equity on that property and rinse and repeat. But you can do something very similar by buying a house that's brand new construction with a tenant already in place and the tax benefits of owning that through depreciation. And, anyway. Johnston Rose says, thank you for saying Boise correctly. I know. So thank you for the questions. All right, thank you, everyone. So tomorrow, please join us for our webinar at noon Eastern time. Again, register for that just by going to morrisinvest.com/webinar right here on the screen. And we will see you guys tomorrow for that live webinar. I'm really excited about it. And bring your questions for anything that we cover in this webinar. It's going to be, bring your notes as well, bring a pen, bring a paper, and we will see you tomorrow. Christine Kemp says, listening to you, if and when my settlement comes, I do not doubt what you are doing. You're investing for all of it, for all to make it in this crazy time. Thank you so much, Christine. I appreciate it. Thank you, everyone. We will see you later. Now go out there, take action to become a real estate investor. I believe it's the #1 way to build wealth and to store wealth, especially as this government continues to print money like it's going out of style.